Hi, good morning, everyone. This is Neeraj Gupta, CFA charter holder, MBA Finance. Uh, Before I kickstart this session, I'll give a simple introduction about myself. I am an independent corporate trainer, and I'm attached with ICICI Securities for the last 6 years in the capacity of independent corporate trainer. And today, I've been given an opportunity to discuss and to share a topic which is very relevant in today's times, that is equity investments. But before I kickstart this session itself, I would just ask everyone, what are the few things we tend to observe or see across our surroundings? Few of the things which we can visualize and see across our surroundings would be, I guess, swanky offices, well-constructed building, which have designer fittings, plus best to best materials in it. We would also see mobile phones, the advancement of technology, which has effectively facilitated the way we do our transactions. In simple way, the kind of expertise and the time efficiency which we have been able to get over a period of last 5-10 years over with the advancement of technology is something which is unimaginable. So all of these businesses have what we can say, they have prospered over a period of time. So prosperity as the word I can use. So the question which all of us should ask each one of us would be that, are we participating in such prosperous businesses? For many of us, I believe the answer could be no. So what is the way to participate in these businesses? The answer lies in this 6-letter word, that is equity. So when we talk about equity as an investment or equity as an option to invest money, it is nothing but the way we can participate in those businesses. So our objective in this session today would revolve around covering 4 aspects of equity investments, which would first start with what exactly is equity investment, where we cover the simple explanation of equity investments. Then why do we need to make investments into equity? That is the important part. What are the different basic features of equity as an investment? The concept of where exactly I can buy and sell equity as a tool, and how I can buy and sell, that is how I can trade. So these are the few aspects or few 4 pillars around which our session would revolve today. And as all of you are aware of it, we have a chat box where you can pass on your queries. And in between the course of this session, my pedagogy would be very straightforward. You can ask the questions which are relevant to our session, and I'll look around the questions, and whenever there would be anything which is being pending at my end, I'll just look around and get into the same. Now, equity investments or investments per se. So when we talk about investments, the one thing which comes in my mind would always be, what exactly is saving? So in simple way, for all of us, whatever is left over from our income, all of us are doing our different job roles. So we are into different professions. So whatever is left over from my income is nothing but saving. So let's say somebody is earning 1 lakh rupees a month, and he spends 80,000 rupees in a month. The remaining 20,000 would be saving. And once we are left over with saving, we have to channelize them into productive purposes. So there is a key difference between saving and investment. And these are the different investment options which are available to any individual or any institution, any investor in simple way. So once we say that, say saving, you can say investment is a byproduct of saving. So this difference is something which is very, very important for us to understand. So what do we have it here? We have equity investments, debt investments, gold, and real estate. So what you can say here is that the savings would be channelized into these 4 investable options. Many of us would be aware of it. Real estate is something which is very common to us. In our traditional way, we say, in our families, what we used to say, whatever we are able to whatever we are able to get from our whatever is left over, let's park that amount of money into gold or property. So these two are very common for us to understand. Debt investments is something where we get a fixed rate of return. And our point of contention or discussion today would revolve around equity investments. So as I just said in the introduction part, in case I want to participate in the any business, there are two ways ideally. Either I can invest it through giving money to that party, giving money to that business, I should say. That would be, let's say, a company where I wish to lend. But the better way to participate, and I'm using the word participation in the sense you want to participate in the profitability or the success of that business. When we talk about debt investments, the participation would be very limited because you would be getting a fixed rate of return. But when we talk about equity investments, the participation would be like an actual owner of a business. So when I want to be an owner of a business, either I should start a business and run it up, or I can participate in it through a form of a tool which we call as equity investments. So there are four words which we normally use when we talk about equity, and this is just a return part, but for all of us, I would say we use words like equity, share, stock, and at times you might have word scrip. So these are nothing but interchangeably used words. So you can either they mean the same, but they are just the language. They are used in different ways, different times, and different terms. Now, when they say, let's say, whenever we are investing somewhere, the first thing that which every investor would look around is, what am I going to get out of it? Nobody would like to invest anywhere with respect to getting losses, right? No sane investor. But the return aspect is something which is pivotal for any investment avenue to be chosen. So when we talk about, this is just a glimpse of how equity as an investment has given returns to any individual investor, wherein we have a timeline, let's say from it's like last 20 odd years. This data can further be extended. Let's say in case I'll extend by 1 or 2 years here and there, the returns would be close to 13%. So 12.5% is something we can get. We normally we have seen that is a long-term return when we talk about equity investments. One thing I would like to share, which is not here, but it is something which all of us should be aware of it. Whenever we talk about equity, as I just told you, equity in simple way means that I want to participate in that business. And you know, by the logical sense, no business can succeed overnight. And equity investments are like buying a plant, buying a sapling, I should say. Then a sapling would become a plant, and a plant would become a tree. But no sapling can become a tree in a short span of time. So what do we know? What do we need to do? We need to nurture that sapling to become a plant and thereafter a tree. So this entire process of nurturing needs time. So when we talk about investing into equity, ideally, they have different literatures of how long you should keep the money so that you can get best results out of equity. But you can take, let's say, a minimum holding period of getting right returns from equity has to be at least 3 years. Beyond that is something that is up to you. But below that is something which you should not look for when you want to invest for a period of less than 3 years. Then equity might not give you the right results in simple way, because that is something which it has a volatility aspect. So returns can go up and down in a short span of time. Now, debt securities, debt, real estate, and gold. These are the returns which have been manifested here, where these are the annual returns. And I am very well sure one thing we have not added here is a return which we also get in form of cash flow from equity, which is in the range of 1.5%. So when I include the element of dividend, as they say, many of you would have heard about dividend. So when I talk about dividend, in case I'll add dividend into this part as well. So adding a dividend, which is in our India's case, the dividend yield is close to 1.5%. So 1.5 plus 12.5 would give me close to 14% annual return. Now, the question which all of us should ask among ourselves would be that, considering all the investable options, which one out of it would help me out in covering one of the most important risk which each one of us is exposed to? Because all of us want to invest for future, right? We have some future goals. All of us want to invest for future, but future is uncertain. In the sense, the one thing which is certain in future, which I personally believe, is the evil called महंगाई, or which we call as inflation. So when you consider inflation, many people would say inflation is 5%, 6%. But I normally tend to give a very small example, and it's a very, very basic example. Some might find it laughable as well, but it's a very relevant example which all of us should look around. All of us would have tasted one of the largest selling biscuits in India, or across the globe, I should say, which we say as Parle-G. So when we talk about having the same standard of living, let's say in case I would be consuming the same amount of article over a period of time. A simple example which I would normally give is when we talk about equity investments, where they actually fit in the investment allocation for any investor, would be that equity as an investment tool can help you out in covering one of the most challenging risks, which is inflation. And a small example of inflation which I like to give is, and we should use a better word, we can say, let's say a purchasing power risk, that we want to maintain the same standard of living. A small example which I would like to highlight here is, let's say many of us would have consumed Parle-G. And when we talk about Parle-G, what do we understand by it? The standard size of Parle-G currently, in case anyone would have looked at, would be coming at ₹5, and it would be giving a quantity of, right now, after the extra part is being removed, the quantity is 50 grams. In 2010, the same Parle-G used to come at a cost of ₹4, and it used to have a weight of 100 grams. In case you calculate the value of ₹5 in the last 11 odd years, the value of ₹5 would have gone down to close to ₹1.7. So what does this indicate? In simple way, it indicates in the last 11 odd years, the rate of change in the price levels of anything we consume to maintain the same standard of living, जैसा हम अभी हैं वैसे ही हम सेम चीज चलाना चाहते हैं, एटलीस्ट वो चीज, the rate would be close to 8 to 9%, specifically in a country like India. That would always be there. So what is the investable option we have, considering that we have to cover up that risk? This is something which we can highlight and can see from the return aspect which is provided by equity. So one of the advantages, or one of the reasons why we should invest into equity, and our objective is not to make you aware that we should only invest into equity, but I'm just giving a rationale of why we should invest into equity. Apart from participating in the businesses, it would also help us out in serving the purpose of covering one of the most important risks which each one of us is exposed to during our entire lifespan, is the risk of the price levels increasing, which we call it to be inflation, we might call it to be purchasing power risk, whatever we may call it. Now, this is just a simple image where we have how different asset classes perform in respect to the returns as well as risk. And when we say, let's say, in simple way, there is nothing in this world which would give you higher return, which would give you returns without risk. So we have to be smart enough in looking at that. In case I want to invest in a business through equity, yes, there would be returns, but at the same time, we have to be an informed investor, which means we have to consider what is there in the business. So you can take any example of any company. A company or a stock is nothing but the business it represents. You can have any company. Let's say whether you talk about the best to best companies, whether you talk about X, company Y, whether it is in the paint industry, in the automobile industry, what you will find out is the price of that stock, which we say stock price. In my view, in simple way, when I say a stock price is nothing but the amount of water we have in Arabian Sea. And what does the water in, how much the water would be there in Arabian Sea? That would depend upon the depth of that water, right? And the depth of the water is from the perspective of the fundamental soundness of a business. Kitna ek business, ek company ka kitna fundamentally strong hai. And the stock price, there could be, जैसे कहते हैं ना, when we have this base, in between monsoon के time पर क्या आती हैं? High tides भी आती हैं. Similarly, the stock price can also go in between up and down, but it would go up to a point where we have the amount of water apart from the high tides. So high tides are like speculative movements or volatility in the stock price. But the stronger the base of a company, which means the stronger the business of a company, the value of the company would move in line with that. Specifically in the long run, there can be aberrations in the short run, which will definitely be there, because in the short run anything can happen. But in primarily, when we talk about in the long run, the goodness of the company's business would be reflected in the price of the stock. I would not like to say anything as of now with respect to any particular company, but I would like to share, let's say you can look around any company. When we talk about any company, you would definitely see that the business of the company is something which drives the price of the stock in the long run. Now, there are three ways we can make money, and primarily, let's say when we talk about an equity as a stock, let's say a company can give returns in two forms, or a stock can give returns in two forms. One, a regular income, which we normally say as dividends. So many of us would have heard that a particular company called XYZ has given me this rate of dividend. But always remember, dividend is always paid. Right now, it is not the case, because as per the Companies Act, that terminology has been changed. But it used to be earlier that dividend is paid as a percentage of face value. So let's say the face value of a company's share could be 1 rupee, 10 rupee, anything. And in case I am citing an example, which I guess I am right now doing, so that for the understanding of everyone, the face value of the most prominent stock many of you would have heard is SBI, which is right now 1 rupee. So in case SBI's management decides that we would be paying a dividend of 100%, which means 100% of 1 rupee, that comes out to be how much? 1 rupee effectively. So that is the first source of income which any investor would have. But this has to be taken into cognizance that dividend kabhi mil sakta hai aur kabhi nahi mil sakta. So when we talk about dividend, it is all about the discretion of the management, where we say the percentage as well as the timing of dividend is something which is up to the management. But normally good companies which are performing well, they would normally distribute dividends at least once in a year. At times, they also give dividends more than once in a year. The second way is something we call as capital gain. For all of us who do not know about capital gain, finance is very easy. In simple way, 70% of the understanding of the concept lies in the name. Capital gain का बहुत simple सा मतलब is, capital means investment, and anything you were able to make out of that investment is a gain. So let's say you invested 100 rupees in a stock, the stock has moved to 120, that 20 rupees your capital gain. Primarily in case of equity investment, this is the single biggest reason, or this is the single biggest factor which attributes in the success or the performance or the return of any equity investment. Any clarifications to anyone, I would be happy to take up till now, and you can type in the chat box, please. Somebody has asked, on what basis do they give dividends once or twice a year? Simply put, Ayush, they give dividends on the basis of their management decides how much money they need to expand their operations. And in case, let's say in simple way, dividends are always paid from the profit after tax of a company. In simple way, whatever profits the company has earned after meeting or after whatever sales the company has done, after paying all the expenses out of it and even the taxes, whatever is left over is profit after tax. And out of profit after tax, the management decides how much they can share with the investor right away in form of dividend and how much they would keep with them in form of, you can say, retained earnings or at times reserve and surpluses. That is completely at the management discretion, but every sensible management would definitely look into their needs or their need for further expansion. In case they need more money, then they might not pay a higher rate of dividend. In case they need lesser amount of money, then they can pay a higher rate of dividend. But dividends would always be paid by a company which should normally be in profits. I hope I have answered your query, Ayush. Anyone else who has any queries? There is no average rate, but let's say it depends upon companies to companies. Company to company, in simple way, let's say every company has a past history. In case I'll give you an example, many of you would have heard about the name of a company called ICICI Motors, which makes bikes like Royal Enfield. In case you look around the dividend history, till 2013, they did not pay any dividend, but they started paying dividends after that. Maybe they required money up till 2013 to expand their business, and post that they paid. On the other hand, a counterpart of ICICI Motors would be Hero MotoCorp. They have been paying, they have a history of paying highest dividends in the entire automobile industry. So it totally depends upon the management. There is no average rate we can say, but in case you're asking me an average rate for, let's say, a particular index, I would say India's case, we have two indices, Sensex and Nifty. In case you look around Sensex and Nifty, we have something called a concept which is called dividend yield, which is dividend per share divided by current market price, which should be approximately 1.5% every year. Face value means the value of one share in the books of the company, in the sense at the price of a share at which the share has been there in the books of the company. You can take it this way. Whether you get dividends or whether you get any interest, the taxation as per the Income Tax Act 1961 is it would be taken as an income of the investor. What you might have asked, I'm just remolding your question in case I could grasp it right, that whether I should invest into a stock which is paying higher rate of dividend. I would say it totally depends upon the kind of investor. Some investors who are, let's say, investors who are retired investors, for them, they require regular cash flow. For them, investing into dividends, investing into companies which pay higher dividend can be one of the reasons. Yes, price appreciation, Ayush. This is what we just discussed. When we invest into equity, there are two forms of return, either this or this. In some of these stocks, you would have slightly higher portion of this, but in many of these stocks, you would have higher portion of this. So price gain or price appreciation is something you look at. Now, moving ahead, how wealth can be created in equities. This is a very interesting example of a very renowned company called Wipro, which is currently having a 73% ownership by Azim Premji and remaining 27% by all of us as an investor. So this is an example of that somebody would have bought 100 shares of Wipro at the rate of 100 in the year 1980. Bonus means, in simple way, bonus ka matlab hai, whatever number of shares you held, they are getting increased without you being paying anything. So bonus, you had 100 shares at the start in 1981 with a bonus of 1:1, which means for every one share, you are getting one extra share. So the total number of shares have become 200. Similarly, in 1985, 1:1 bonus. So these 200 shares have become 400. The share was split into 10. So 1:10, the split ratio. So effectively 400 shares now became 4,000 shares. Post that we had bonuses and other bonus as well. Then they were again split and in the ratio of 1:5. And there was another corporate action of bonus, another bonuses. So at the end of 2019, that was the last corporate action which happened on this stock. The number of shares would have increased to these many from the 100 shares in case somebody would have held that share till date. So there is a condition in it. In case somebody would have held those 100 shares till date, this is the kind of wealth which would have been created in terms of the number of shares. The price of Wipro as on February 22nd, this is the latest price we had when we had made this content, was 550. And the number of shares multiplied by this 550 would have given me the total wealth of 1400 crores. So effectively, somebody would have invested 100 into 100. That would have given me how much? The amount of investment would have been how much? 10,000. So 10,000 rupees invested by someone, any investor in the year 1981 in Wipro stock would have led to the value of his wealth to increase to 1400 crores. And that is the beauty of investing into the right share. As I said, I'm using a word categorically. We have to be informed investor, and it's a process. It is something which we will not be able to cover it right away, but one of the do's as an investor you need to know is that never ever go by the logic that somebody else is investing, I should also invest. Yes, you should invest, but on the basis of your own set of information. And you have to be an informed investor. We can read more. There is no limitation of reading, no limitation of resources we have, but you have to make sure that you take informed decision. Similarly, we have seen the growth pattern of how different stocks have performed. This is just the price change. And in case I can give a simple example, this was in 2022. And I'll give a small example of my personal example. When I talk about one of the participants, how should we value tech companies? It is something valuation aspect. We are not doing it here, so I would be considering a paucity of time. But I, in my personal view, when we talk about any tech company, we have to look around the key performance indicators of every business. So whenever you look around the key performance indicator of, let's say, any company, like in the e-commerce space, we look at metric like gross merchandise value. And any funding or any amount of investment these companies get, they get as a percentage of gross merchandise value. So you have to look at the key performance indicators of each of these tech companies or each of the businesses. Now, this is an example of how markets have moved over a period of time and how different stocks of Sensex have moved. And I'll give us a very small example of my own personal experience. I was basically I was just sitting in one of the brokerage houses as an intern in I guess somewhere in January 2006, when Sensex crossed 10,000 for the very first time. And one of the famous anchors was there, and they celebrated Sensex touching 10,000 for the very first time, like Sunil Gavaskar scoring 10,000 runs. And just look around from 2008 till date. This graph showcases from 2017 and 2022. Yes, but we can look around slightly beyond that as well. From 10,000 points, Sensex has moved towards right now 57,000, 56,000, whatever it could be the number here and there. So approximately 6 times from 2006 till 2022, 16 years mein 6 times. And many of us can do calculations at their respective levels. And these numbers also showcase the same over a period of the last 5 years. And one thing you can look around, that we have not taken the data and we have not compared anything in a span of 3 months, 4 months, 5 months, 6 months. For an investor in equity investments, the time period has to be slightly longer term. And one thing you can also look around, these are nothing but the companies, the businesses which we normally see in and around ourselves. In the Diwali times, we would have definitely, many of us would have definitely got the whitewash done through many of the items which were sold, or products which were sold by Asian Paints, which has 80% market share in the entire paint industry. We consume articles from Tata Consumers, Bajaj Finance ke through. We might have even taken a bike on EMI or any vehicle, or even white goods, AC, fridge and all, in case we have taken anything on EMI. So these are nothing but the businesses which we see in our surroundings. And in case I cannot be the owner of these businesses, I cannot be the direct owner in a businesses, I can be a investor in these businesses to participate in the prosperity of these businesses, as I say. Now, as I said, equity investment would represent the ownership. Yes. And remember, even buying one share in a company, or even buying one share in the stock of a company, would give me the ownership. Right? And over a period of time, the ownership gets reduced. I would not be getting too much into the one of the you can say very catchy news we have these days is the LIC IPO. And the LIC, the promoter of LIC is 100% is Government of India. And LIC wants to reduce, Government of India wants to reduce, because Government of India is the original owner of the LIC as a company. It was formed in the year 1956. And over a period of time, government has now thought that why we should reduce our holdings, ownership. So let's say 5% out of whatever shares they have, let's say 100 shares they have, owned by Government of India right now, they would be selling, or they would be offering 5 shares to the public. And anyone who buys any one of those 5 shares can now classify himself to be participating in the success of LIC in times to come. Each and every share we buy can be transferable, can be tradable. Normally we say they are tradable through, let's say, jaise hum kehte hain na ki we want to buy fruits and vegetables, so we have to go to a mandi, or we have to go to a market. Similarly, in order to buy shares, we can go to a market which is called equity markets, where we have 2 prominent names. One is National Stock Exchange, second is Bombay Stock Exchange. So these are the markets where I can buy and sell shares. So as I said, the reason of participating in the good times that the share price would rise, I am an optimist, so I would only go for the rise part. There are bad stories as well, but when we become informed investors, in my view, when we become informed investors, majority of the time we can be on the good side. In case we are uninformed investors, we only go by the herd mentality, कि मैंने किसी और ने पैसा लगाया तो मैं भी लगा दूं, then these scenarios can definitely happen. And in simple way, success and failures would always be part of any business we do. And the same lies with these companies. But companies which are managed well, which are growing well, fundamentally sound, they have always, on most occasions in the long run, have performed well. As an investor, you would profit from the share price movements, plus the income we receive in form of dividends. Any clarifications to anyone up till now, please? Somebody has asked, sir, NCDX, you have to look into this stock, so read more, where which kind of business they do. They basically do, they are nothing but, NCDX is a commodity exchange, sir, and we are talking about equity. So you can invest into commodities through MCX, NCDX, NMCE. These are the markets for buying and selling only commodities, not the equity. Any queries as of now, please? You can check around the dividend history of that stock. Ayush has asked, how do I know if an equity gives dividend or not? You can check on the stock price, and you can check on the dividend history of the stock. Dividend should not be taken as the only source of investing into a stock. dividend paid by a company is only one form of the return you can make out of a stock. Always remember, you are not investing. You are not investing for the short run. You are investing for the long run success of the business. And long run success of the business would always be made when the company is smart enough in managing their profits, in the sense they need money for this part. I'll give a very small example. Many of you would have heard about the name of a company called Havels. In case you look around in Maharashtra, they have a plant, and one of the plants is 100% automated now. So they have robotics installed where everything is artificial intelligence based. So for that thing to happen, in the long run, it would definitely benefit the company in terms of cutting down on their cost. For that thing to happen, they need money. So they have two ways to get money, raise money. Either they can approach outside. Let's say you run a business. If the business has generated 10,000 rupees as profit, and you know that you required 8,000 rupees to be invested somewhere in an expansion, what would you do? You might take only 2,000 rupees as dividend, and you would keep 8,000 rupees as retained earnings, so that you can use that 8,000 rupees for an expansion. The same thing would be done by the companies. Any other clarifications to anyone, please? So the companies require money, and they require money, and the profits which the company receives over a period of time, they would try to use that either in form of paying dividends. They would ideally strike a right balance. No company would pay exorbitant Right. Sorry. Hi, welcome back. Welcome back. Welcome back. So sorry, there was a power cut, so the Wi-Fi went off. Now, when we talk about equity, let's say why does company require money? You can take multiple examples. The company is being requiring money for expansion purpose. So there are two ways. Either the company can raise money by issuing equity, or they can raise debt. I can give an example. Let's say example of a company which required money. Example is Cafe Coffee Day, which came up with the first of its own time. They wanted to raise money in the year 2015. They wanted to open up new stores. At times, they also, a company would like to look into how, very importantly, you need to remember that whenever a company is raising money through equity, you have to remember the reason why, what would it do with the amount of money it would be getting out of this, that issuance of equity. And that would ultimately determine whether the equity would be used, or the amount you have invested in the company would be used for productive purposes or not productive purposes. Let's say many times what happens is, let's say a company might have issued equity, shares issue key. They've got money and they would be using equity to pay off their earlier debt. But that might not be a fundamental right way to invest in the company, because they are just paying off the debt instead of using that amount of money primarily for more expansion purpose. And whatever success of that business would have come, they could have used that amount of money to pay off debt, to pay off the loan, you can say. Now, as I said, the company can raise money through loans, or they can have shared ownership with investors. Somebody has asked, is it good to use a margin and buy stocks at dip and just buy cash? What's your view? In simple way, Shubham, I would just say, when we talk about investing, you should use your own money. There is no point swiping a credit card and investing. So it's better not to take debt and then invest. It's always better to invest when you have your own money. That amount can be very small, that is okay. But you should start investing once you have your own money. Now, equity and debt are the two sources of money which a company can have. And within the equity space, we have primary and secondary market. I'll take this in the trading part, Ayush, when we talk about margin buy and margin sell, because that is something where you can understand in a very brief way. Now, when the company comes for this, when the company's shares are offered for the very first time, we call that market to be a primary market. Right example we have is in front of us is LIC. So LIC is a company which is coming, which is trying to issue the shares for the very first time. And that is like they are coming to the primary market. Those shares are offered to the primary market. And normally we say it can be an offer for sale and it can be a IPO. This is what we have a difference primarily. So just take it at your level. Whenever a company would issue the new shares to the investors, where let's say they had 100 shares, and out of 100 shares, the promoters are the original owner is still holding 100 shares, but the management had decided to issue 20 new shares and get money out of it. So these 20 new shares, the issuance of these 20 new shares could be classified as IPO. But in case the original promoters say that I would like to sell some portion of my own shares, so what you can say here is the 20 rupees which are received by the which would be received by the company, they would be going into the company's account. So that would be effectively benefiting the company in terms of being usage, how they would be using it. But when we talk about 100 shares are being issued by the company, are held by the promoter, and out of that 20 shares, the promoter says, I would keep 80 shares with me and 20 I would offer to the investors. So whatever money that is collected through these 20 shares would not be going into the pocket of the company. It would be going into the pocket of the, or in the, that would be received by the promoter. We normally call it to be nothing but OFS, offer for sale. And this is called IPO. And right now, in case you look around, what is going to happen whenever a government would issue shares, we call it to be a process of OFS. because government would sell their own holding. In comparison to when any other company might have issued shares, then in that case, it might be an OFS or it might be an IPO, but there is a difference between the way we should ideally use this word IPO and OFS. Now, as an investor, whenever these shares are offered, whether it is through IPO and OFS, there can be two processes. They can either be issued at fixed price, wherein they would decide the price on their own. Let's say 80 rupees per share. And the second is book building process. In simple way, we can look around the word itself. Whenever a company is opting for a book building process, it means they are building a book. So they are letting the market decide. Market को बोल दिया है, investors bid करेंगे. Book building process open रहेगा for few days, let's say. And investors को बोला जाएगा कि you can put your bids. आप अपने bids डालें. आप किस प्राइस पे खरीदना चाहते हैं, किस प्राइस पे you want to buy. They would definitely give a range, upper and lower limit, and within that they would be offering you, they would offer you the chance to give your quotations. And after the process is getting ended, let's say normally within maximum it is 3 to 7 days in a minimum days, and it can further be extended by 3 more days. So maximum 10 days के लिए ये book building process would be open for the market. And anyone who would participate in that, it's like they are building up the book. And after the book is being built, on the basis of they would estimate a cut-off price, which effectively depends upon किस price पे कितनी bids आएंगी. Let's say 300 was the lower limit and 350 is the upper limit. So the maximum bids might have come at 325. So this 325 is like a cut-off price. And anyone who would be getting the shares would be getting at 325 rupees. This is what we have in book building process. So at times आप इसको बोल सकते हैं book building process का मतलब क्या हुआ कि the company wants to check the pulse of the market, which means what? कंपनी ये देखना चाहती है कि बाजार हमारी कंपनी को कितना वैल्यू देना चाहता है. Now, when we talk about fixed price, 90% issue अगर हम बात करें इंडिया में, 90% issues right now are on book building process, and maximum 10% would be on the fixed price issue, but majority of them would be on book building process. Now we have two markets. Primary market का मतलब हो गया shares are coming for the first time. Once shares have come for the first time, these shares can be bought and sold. Bought and sold मतलब आप खरीद और बेच सकते हैं between investors, between participants. So let's say I have invested in that share of any company which has come with an IPO. I want to sell it. Then in that case, company would not take it back from me. The company would provide me a window to exit. And that window is nothing but secondary market. इसका मतलब है secondary market पे सारे के सारे companies के shares जिन्होंने primary market से पैसा raise किया, उन companies के shares की listing होगी, उन company का नाम mention होगा, listing होगी, समझ लीजिए. And you can buy and sell it on those exchanges. That buying and selling can be, let's say I was holding it, so whom I can sell it to? जो भी खरीदना चाहता है. Every company, somebody has asked, any recent company which has done book building, every company which basically captures the market right now or tries to raise money through equity right now, does it through book building process. They give a range, एक price band दे देते हैं, उस price band के अंदर you can bid. Now NSE and BSE are the two prominent exchanges. The mechanism of NSE is NEAT, we say National Exchange or for Automated Transaction बोलते हैं NEAT, and for BSE we have BSE Online Trading Mechanism. From the year 1996 onwards, the trading happens. We call it to be buying and selling on secondary market. को हम क्या word use करते हैं? Trading. So online screen based trading होती है, जिसका मतलब physical form में trading is no longer in existence. Earlier अगर आप लोगों ने मूवी देखी हो, गुरु मूवी अभिषेक बच्चन की, उसके अंदर ओपन आउटक्राई सिस्टम होता था, जहां पर फ्लोर पे अलग अलग जेस्चर्स बने होते थे. तो जैसे थंब इंप्रेशन किया तो दैट वुड बी लेट्स से प्राइस इज गोइंग अप और प्राइस डाउन. सो There were different ways of presenting it, but that was very cumbersome. जैसे आज की डेट में अगर आप देखते हैं ना, सब कुछ ऑनलाइन हो गया. आपने ग्रोसरी मंगाई है Amazon से या बिग बास्केट से, it's very easy. Similarly, buying and selling of shares through online mechanism has made our life completely easy. So सिक्योरिटीज मार्केट में हमारे पार्टिसिपेंट्स कौन कौन हो गए? सबसे इंपॉर्टेंट पार्टिसिपेंट तो आप लोग, हम लोग, इन्वेस्टर्स. इशुअर्स का मतलब जिन कंपनीज को पैसा चाहिए. किससे पैसा रेज करेंगे? इन्वेस्टर से. इंटरमीडिएटरीज का मतलब हो गया मीडिएटर्स. बेस्ट एग्जांपल, एनी ऑफ द ब्रोकरेज हाउसेस वी हैव. Right now we are talking about ICICI Securities. So ICICI Securities are one of the largest intermediaries in the domain or in the financial markets, and which basically offers us multiple products, including equity. And every broker normally would be taking the membership of the stock exchange. So you can normally all the big brokers, including ICICIdirect, ICICIdirect has taken the membership of both NSE as well as BSE, where majority of the stocks are being offered, and as an investor you can participate in that. Regulators, without regulators तो काम होगा नहीं. Many participants would say that why should I not invest into cryptocurrency? The reason of not investing into cryptos would be this: when we invest into equity, they have a regulator, which is SEBI, which has come under the governance of Government of India, SEBI Act 1988. But in case of cryptos, we do not have any regulators. And automatically, when you do not have any regulator, so investor doesn't have any say to even speak about it, any queries. Somebody has asked me, book building and fresh issue at fresh price. You can say book building and fixed price are the two ways of any company raising money, Ayush. And in that case, just remember, fixed price mein the price is fixed by the issuer. They would not give a range. They would not ask the investors to give their quote. They would say, we are offering these number of shares at this price. That's it. In a book building issue, it is like the market is being given the option to give their prices within a range. So market decides the cutoff price or the price at which the shares would be issued. Now we have two exchanges. Somebody has also asked, आयुष फिक्स प्राइस इशू का मैंने एग्जांपल दिया ना आपको अभी. 80 रुपीज का अगर मेरे को कोई स्टॉक आता है, एक कंपनी ने बोला 80 रुपीज में मैं स्टॉक ऑफर करना चाहता हूं, दैट्स इट. दैट इज अ फिक्स प्राइस इशू. बट बुक बिल्डिंग इशू, व्हाट वुड दे से? दे वुड गिव यू अ बैंड, एंड दैट बैंड कुड बी 70 to, let's say, 90, and they would ask you to give your bids between this range. So at the time of issuance in a book building process, at the time of issuing the shares, at the time of the issue is being open, the issuer doesn't fix up the price. He lets the market decide the price. So let's say, depending upon the bids which have come, let's say the bid might have come at 78 rupees. Maximum bids might have come at 78 rupees. So this could be the price, the issuance price could be very, very close to the 78. So you can say in fixed price issue, they would not give you the option of choosing the price. They would say, we want to offer these number of shares. Let's say 1000 shares we are offering at a price of 75. That's it. Either you wish to buy or not buy. In case you wish to put up bid, you can put up bid at 75 rupees per share. There is no rule that when a company is offering the share at fixed price issue or book building issue, that they would be offering one of them would be cheaper or expensive. There is nothing of that sort. It is completely on the onus. The onus lies with the investment managers, which in simple way, they are nothing but the entities which manage the business, which manage the entire process of issuance of securities. Like ICICI Securities is one of the investment bankers as well. So they have assisted in multiple issuances. So they would have their own calculations done. What would be the overall value of the company and how much of that they want to dilute. Right now, in simple way, when you take a company like LIC, the government expects that the value of the company should be close to 14 lakh crores, and they want to sell 5% of that. So effectively, they would be offering the shares to the tune of 70,000 crores ke aspas. And accordingly, in the draft rating prospectus, they have mentioned that they want to offer close to 31 crore 62 lakh shares to the public. It depends totally. Dividend payout can be good, can be bad. That depends upon the avenues the company has. The only explanation I can give you, Mr. R, in this is PSU companies pay higher rate of dividend in comparison to non-PSU companies because government has an ownership in all the PSU companies. And when the government has an ownership in all the PSU companies, government needs money to finance the expenditure. And one of the sources of revenue for the government would also always be the dividends they receive in their PSUs. Right now in India, as far as the last I read, we would be having close to 1950 PSUs. Some of them are performing, many of them are not performing. So 1950 PSUs ke andar se government has a stake, and the government wants profit or dividend to be coming at regular pace. So that is why you'll find many of the higher dividend paying stocks or companies would be coming from the PSU sites. But they might not be having too much of a capital appreciation. What do we mean by indices? Many of you have understood or have read about it, let's say at multiple levels. पढ़ा भी होगा, सेंसेक्स और निफ्टी बोलते हैं. अभी यूक्रेन में जो हो रहा है सब लोगों ने देखा भी होगा. There have been cases when the markets has gone down. So when we talk about Indian equity market or how Indian equity market has performed, we say we are defining Sensex or Nifty. So in simple way, Sensex and Nifty are like what we would be having currently very soon, like exit polls. They represent the population. On NSE, which is not on Nifty, is a part of an index which is based upon NSE, right? A National Stock Exchange. So NSE ka Nifty ho gaya, Sensex is of BSE. On NSE we have, and on an NSE we have close to 2,600 shares which are listed, companies or stocks which are listed. So out of those 2,600, I cannot have, they are the population we have. And sample हमेशा किसमें से बनता है? Population में से. तो Nifty क्या बन गया? The sample of those 2,600 stocks. And that sample would be chosen very deliberately, very sensibly by the index committee. And they would come up with those stocks which are best representing those 2,600 companies. They are both fine, sir. You can use BSE and NSE, no issues. Government of India has sold entire amount of its holdings to Tata now. So government holds nothing. You can trade on any of the exchanges, NSE and BSE, no issues. And exchanges and every entity in the securities market is regulated by SEBI. So अगर किसी exchange को license लेना है, it has to file an application, pay the fees, and regularity has to be done with SEBI. It's not something they are self-regulated. No. Now, whenever we invest, I should go about this part. Whenever we talk about investing, I used to know you can buy and sell a stock only when it is being offered by the exchange. For example, I am giving an example of a company which you might have heard, SpiceJet. SpiceJet is a stock which is only available on BSE. It is not there on NSE. So you can only buy SpiceJet or sell SpiceJet only on BSE. But in case you have a stock like, let's say, ICICIDirect, which is there on both NSE and BSE, but the buying and selling activity would happen differently in both the exchanges. NSE is separate, BSE is separate. So you buy a stock in NSE, you have to pay the payment on NSE, you would be getting the shares on NSE. You sell the stock on BSE, the selling of the stock would be taken as a separate exercise, separate leg. Ranjan, that is something different. How do all price hike affects paint stocks? You are getting into the analysis part, but in simple way, paint, when we talk about paint, in simple way, let's say you can look around, Ranjan, you can look around, Shubham. When you do a whitewash at your home, what does the first thing is being asked by the painter or whitewash guy? He asks you to provide me X liters of kerosene oil. Similarly, one of the most important ingredient of and kerosene oil is nothing but one of the versions of crude oil. So crude oil से kerosene oil भी बनेगा और सारे oils बनेंगे. So any change in the crude oil, any increase in crude oil prices would have an effect on kerosene oil prices. Similarly, when we talk about paint, one of the most important ingredients or raw materials in any paint would always be crude oil. So that is why we have this. I do not have any Telegram channel. Thank you very much for recommending me. I'll look into it. Companies when listed on exchange, does they have to pay? Yes, they have to pay annual listing fee. And that annual listing fee depends upon their market value. The higher the market value, the higher they have to pay the listing fee. And normally listing fee would be in different slabs. So we have different slabs. In case the market value is between 100 to 200 CR, you have to pay this much amount of listing fee and all that. So whenever we want to buy any stock, and I'm going by an optimistic scenario where I want to buy something, there would always be three things I require. First and most important, bank account. बिना पैसे के तो गाड़ी चलेगी नहीं. Then trading account. These trading and demat account can be opened by any intermediary, which we normally call it to be a trading member or a broker. Let's say we want to start trading. You need to have a bank account with any of the banks. You can link it with a trading and demat account offered by ICICI Securities. So what exactly would be the role of a trading account? Trading account is a platform जिसके through आप shares खरीद और बेच सकते हैं. In simple way, this would give you the access to different shares which are there on NSE and BSE. So once you buy these shares, you have to keep it somewhere. So demat account is nothing but an e-locker. Demat has a full name, dematerialization, which in simple way would signify converting shares from physical form to electronic form. In 1996, we had the first depository in India with a name called NSDL. And 1999, we had the second one, CDSL. Both of them offer depository or demat accounts idly. They are the depositories in India, and they offer demat facilities. So demat facilities are offered by majority of the demat. We call them DPs, depository participant. So ICICI Securities is one of the 900 depository participants we have. 900. And right now, as far as my information goes, we had 9.87 crore demat accounts in India as on 31st December 2021. With the announcement of your LIC IPO, this number would further increase. So you can buy and sell the shares, and you need to have these three accounts. This can be done through an online mechanism these days, through the websites we have of these brokers. Then you can call and speak to the representative of the broker through the RM we have, and we can also use it through the mobile applications. So savings account you need, बिना पैसे की गाड़ी चलेगी नहीं. Demat account के अंदर आपके e-locker है, तो shares would be coming in and shares would be moving out from there. So ICICI Securities, ICICI Bank are the DPs we have. Then trading account can be opened with any of the brokers. The buying and selling is very straightforward. Once you want to buy something, what would happen? You would keep the money, transfer the money from bank account to trading account. Trading account, so you would execute the trade. Let's say you want to buy the stock of ICICI Bank. I would showcase you just a while in a subsequent slides as well. How can I delete my linked bank account with ICICIdirect? Because I have two added accounts, and that you can look around the call center and you can get the access, sir. You can speak to the call center on the website and you can get the answer for this. It would not be a big thing. It can be technically handled. So bank account, then trading account, and then demat account. Similarly, from the seller's perspective, it would be the other way around. he would trade demat account से trading से it would be going towards the money would be coming in the bank account. Now, before I showcase you these orders and how to trade, how to just give you a glimpse of trade, I would like to showcase you this. I hope everyone can see my screen, right? This is how, let's say, as a participant in the market, this is how the entire bid and ask, bid and offer. We can say bid, offer, or bid and ask. Ask means and bid means simply, bid ka matlab hai somebody in the market is willing to buy shares from you. And offer means somebody in the market is willing to offer the shares to you. So consider yourself to be one of the participants. तो आपके लेवल पे हमेशा क्या रहेगा? The bid price, somebody wants to buy from you. So you would always like to sell to someone who is offering you the highest price, right? So bid prices would always be in the descending order. You can see it here. 400 से 399, 398, 397, 396. So as a seller, in case I would have been a seller of this stock, you would like to sell it at which price? The highest possible price. So in priority terms, they would be lined up like this. When you want to offer it to somebody, which means you want to offer it to somebody you want to buy it, somebody wants to offer it to you. You would always like to buy at the lowest possible price, right? Because for you, that would become your best price. You would not like to buy, let's say somebody is offering you the shares at 402 and somebody is offering you the shares at 407. From whom you would like to buy? From somebody who is offering you the shares at a lower price. So you can say these two prices are your best bid and ask price. So at any point of time, you would always find the best bid price and the best offer price to be coming at the top, and thereafter the prices would become. Mr. R, this is an operational kind of a query which you can handle, which you can speak to our customer care, which is available on our website, where you have the numbers, you can share the details, and they would definitely help you out in sorting your issue. Now, normally when we want to buy or sell, I'm just trying to showcase you the same thing on our platform. I hope you can see this, and I'm just removing the annotation. Let's say I want to buy any stock. This would not be tradable. Let's say I want to buy the stock of ICICI Bank. So I have to basically look for the exchange. Kis market mein jana hai mujhe? There can be two sabzi mandis, right? I want to look into which sabzi mandi I want to buy the fruits and vegetables. I want to buy it on NSE or BSE. So wherever I wish to buy, I have to choose the option. I have to put in the price. So here it is mentioned the price on NSE is 730.05 and on BSE 730.45. These small differences can definitely be there. And you can place the quantity. So once you open your account, you have this equity part. Once you put option, you choose the equity option, you have the option to place the order. And let's say I want to buy 100 shares. So once you buy the 100 shares, you have been given two options. You can look around. You have a limit price or you can put a market order. So you have a limit order or a market order. Can you see this? I hope everyone can see. Market and limit order. And this is a very, very simple way to understand. You can choose the limit order or a market order. But what is exactly would they offer? When market order is the one, when you let the market decide the price. So in this case, in case I would have chosen 100 shares to be bought, मैं 100 shares खरीदना चाहता हूं, and मैंने choose किया market order. इसका मतलब क्या हुआ? I want execution की certainty. I want my shares, 100 shares, at whatever price somebody is willing to offer it to me. So market में जो भी price पे 100 shares मेरे first 100 shares जो मुझे दे देगा, मेरा order execute हो जाएगा. In case I want to keep a control over the price of my purchase, so मैं control करना क्या चाहता हूं? What do I want to do? I want to basically do. So this priority cycle would be the one which would have been offered to me as an investor, as a participant, or as a user of ICICI Securities. Maybe I cannot show you my portfolio, but it could be, let's say, I might have invested some small amount of money, so they might have given me the services. Now when I want to use a limit price, I want to have a control over the price. मैं कंट्रोल करना चाहता हूं किसके ऊपर? मेरी परचेज प्राइस के ऊपर. लेट्स से यहाँ पे 730 लिखा है, एंड मैं क्या चाहता हूं कि आई वांट टू बाय दिस शेयर एट 725. क्योंकि लॉजिक तो यही है ना, अगर आप 731 पे डालेंगे तो क्या लॉजिक है? 730 में तो लोग बेचने के लिए तैयार बैठे हैं आपको. So you would like to put a buy price. When you want to put a limit buy price, it would always be offered at a lower price than the current market price. So when you use a limit order, the objective is to put a control, to have a price certainty. You want to have a certainty over the price of your buy or sell. When you want to take a market order, it is nothing but you are letting the market decide the price. And very importantly, when we talk about the market deciding the price, in case of a market order, you want certainty of your execution, कि मेरा ट्रेड कंप्लीट हो जाए, कंप्लीशन की सर्टेनिटी चाहिए. इन केस ऑफ योर लिमिट ऑर्डर, आप किस चीज की सर्टेनिटी चाहते हैं? यू वांट अ सर्टेनिटी ऑफ द प्राइस. प्राइस मींस द प्राइस एट विच you would be you wish to buy the share, or the price at which you wish to sell the share. In case you are already holding the shares, then you might have chosen cash sell, and whichever shares you had, you would like to have 730 price चल रहा है, but limit price कितना डालते हैं? You would have put a limit price more than 730. Why? Because you, as a sensible investor, you would always like to sell at a higher price than what is available in the market, in case you want to keep a control over the price. But in case you would have kept a market order, then whatever would be the price offered by somebody, so whatever would be the bid price, किसी भी bid price पे आप चाहते थे आपका ऑर्डर एग्जीक्यूट हो जाए. What you wanted in market order? Execution की certainty. In limit order you want price की certainty. याद रखना है, when we come up with any order in the system, ना, it's always on a real time basis, and in simple way the orders get executed on a very simple logic: price and time priority. Example of the same is here. Let's say these are the prices which we had, right? And what do you want to do? You wanted to buy, A wanted to buy 1000 shares at 402. इसका मतलब खरीदना चाहते हैं. आपका बिड ऑर्डर कहां चला गया? यहां पे मार्केट के लिए. एंड ऑफर कितने हो रहे हैं शेयर्स कॉरेस्पॉन्डिंग प्राइस पे? 600. So you have put in a cap कि I only want to buy the share at 402 rupees. So but in the market, the counterparty, the opposite party, somebody wants to offer it to you, is only willing to offer you 600 shares at this price. No extra charges. It's a facility you have. No extra charges. So what is going to happen here? Because you have put in a cap of 402 rupees of price, out of 1000 shares of your buy order, you would only be getting 600 shares. And what would happen? Your remaining unfilled quantity of 400 would remain here at 402 rupees. But there is no other party as of now who is willing to offer you the shares at 402 rupees. We are not even saying that you would be getting 400 shares, but nobody in the market is right now ready to offer you any share, not even one share at 402. So limit price में क्या होगा? जैसे मैंने बोला limit order में, your order might not get executed completely. There is no order execution certainty. But in case of market order, in case the stock has enough liquidity, there are enough shares which are tradable, on most occasions, you would have your order getting completed. Yes, Amit, you can do it, but the trading would be done separately. The trading would be handled separately. It would be handled separately. Buying would be done in NSE, selling would be done on BSE, but it would not be something which is individually. It would be has to be handled individually, I should say. So you buy any share on NSE, and you want to sell the same share on BSE, but you can do it through two accounts. In case you want to do it simultaneously, so you need to have two broker accounts. But the clearing and settlement part, buying में आपको क्या देना पड़ेगा? आपको पैसा देना पड़ेगा, shares मिलेंगे. And selling में you have to have shares and thereafter you have to make the payment. You have to buy the shares later on. So on NSE, the transaction would be taken separately, and on BSE, the transaction would be taken separately. NSE and BSE के बीच में अगर आप लेते हैं तो ऑटोमेटिकली सेटलमेंट नहीं होता. In terms of when we talk about आजकल इंटरपोर्टेबिलिटी कुछ आ गया, but that is on your positions you have in two separate exchanges. But for the same stock, the treatment would be separate. रीड्स एंड इन्वेट्स का थोड़ा सा ऑफ रिकॉर्ड हो जाएगा. इन केस टाइम परमिट्स आई विल डिस्कस इट एट द एंड. आई जस्ट गिव अ ब्रीफ. पोस्ट ट्रेड क्या होगा? व्हेनेवर योर ट्रेड इज गेटिंग कंफर्म, व्हिच मींस आपने कोई शेयर खरीदा, शेयर्स मिल गए, ऑर्डर एग्जीक्यूट हो गया, तो आप ऑर्डर डालते हैं. अगर ऑर्डर आपका एग्जीक्यूट हो जाता है मतलब ऑर्डर फिल हो गया, आपको शेयर्स मिल गए, पॉसिबिलिटी है यू माइट हैव गॉट ऑल द क्वांटिटी और यू माइट हैव गॉट सम पोर्शन ऑफ द क्वांटिटी. कुछ भी मिलेगा उसका आपको एक कॉन्ट्रैक्ट नोट बन के आता है. वो कॉन्ट्रैक्ट नोट राइट नाउ इलेक्ट्रॉनिक फॉर्म में आता है और फिजिकल फॉर्म में भी आता है. आपके घर लेटर्स आते हैं, मेरे घर भी बहुत लेटर्स आते हैं. आई हैव फॉरगॉटन टू इनफैक्ट कैंसिल आउट द ऑप्शन, सो मैं खुद परेशान हो गया हूं आजकल. बट फिजिकल भी बहुत आते हैं, फिजिकल भी आते हैं टाइम टू टाइम. बट कॉन्ट्रैक्ट नोट आया एंड कॉन्ट्रैक्ट नोट सारे डिटेल्स देगा. एट व्हाट टाइम ऑर्डर गॉट एग्जीक्यूटेड, व्हाट इज योर डीपी आईडी, मतलब ये आपका क्लाइंट आईडी हो गया, उसके साथ साथ आपका पैन अकाउंट नंबर आ गया, सारी डिटेल्स आएंगी. ब्रोकरेज कितना होगा, स्टैम्प ड्यूटी कितना होगा, लिस्टिंग सेबी के चार्जेस कितने हैं, जीएसटी कितना होगा, ईच एंड एवरी डिटेल्स वुड बी देयर एंड द अमाउंट टू बी पेड एट द एंड, नेट पेबल अमाउंट. सेटलमेंट नॉर्मली जब भी ट्रेड होता है, एक्सचेंजेस क्या करती हैं? एक सिंपल सा अगर मैं आपको एक्सप्लेनेशन दूं, विच वी ऑल शुड रिमेंबर. व्हेन वी बाय एनी शेयर, द ट्रेडिंग हैपेंस ऑन द टी डे. लेट्स से आज है मंडे, सो ट्रेडिंग कब हुआ? मंडे को. एंड विद इन T+2 days योर क्लियरिंग एंड सेटलमेंट वुड हैपन. मतलब आपके अकाउंट में शेयर्स कब तक आ जाएंगे? वेंसडे तक. सो T+2 day. Important point to be noted is trading is done by the exchange and this clearing and settlement part, मतलब ट्यूसडे का जो काम है और वेंसडे का जो काम है, तो बायर के अकाउंट से पैसा जाएगा पहले एक जगह, उसके बाद पैसा जाएगा सेलर के पास. सेलर के अकाउंट से शेयर्स जाएंगे एक जगह, उसके बाद शेयर्स वुड गेट ट्रांसफर टू द बायर्स अकाउंट. दिस एंटायर प्रोसेस इज कॉल्ड क्लियरिंग एंड सेटलमेंट एंड नॉर्मली इट टेक्स 2 days पोस्ट द ट्रेडिंग डेट. सो काफी बार हम बोलते हैं ट्रेडिंग डे या ट्रेडिंग सेशन एक ही चीज है. एंड दिस एंटायर प्रोसेस वुड गेट कंप्लीटेड इन 2 days. Very soon, in different types of the stocks we have, this is going to get further reduced to T+1 day. By the end of, let's say, in fact, by the end of January 2022, that is a timeline SEBI has come up with. This T+1 clearing and the trading part, trading, clearing and settlement part would be done on majority of the stocks. But as of now, we have T+2 for the sake of understanding. So what are the do's we have? Always remember, in my books, you need to be, these two are very, very important. First, have a time horizon. Never ever invest in equity for the period of less than for a short period of time. Secondly, have realistic ideas about the returns. Anything which is very shiny, as they say, too gloomy, can basically lead to haziness. And effectively, when we say something which glitters too much, it basically leads to more losses than returns. Always remember, we need to be realistic. Plus, the concept which I just discussed about buying a sapling, it becomes a plant and then it becomes a tree. Some of the trees or plants grow faster, some take time, but everything would take time. It is not something which can, it's not a 2 minutes Maggie. इनफैक्ट मैगी के ऊपर भी लिखा होता 2 मिनट की मैगी, बट 2 मिनट में कभी नहीं बनती. इट टेक्स टाइम टू गेट द बेस्ट रिजल्ट्स. सो डू योर ओन एनालिसिस, स्टडी मोर, study newspapers, go through our websites where we have enough information. Once you, let's say, in case I can tell you from the perspective of ICICI Securities, once you subscribe, become a investor and take our services, you get the option to get even the detailed reports about different companies. You can read about those reports, information about the reports. It would make you much more informed. And the purpose of financial education for which we are doing this exercise is to basically help you out in making lesser number of errors. You might not become an investor who can make substantial returns in a short span of time, but mark my words, the more we read, the less errors we make in whatever we do. And the same thing is reflected in case of equity investments. Diversification, yes, not all, never ever invest in all these stocks. What we should not do is herd tips, blindly following everything. Somebody has asked me that what are the total taxes to be paid for bifurcation? How much percentage it adds to the brokerage? Brokerage depends upon the plan you have taken, that you can look around for the plans. But when we talk about the charges are, let's say, the taxes and everything is decided by the government. So it is something which we cannot say, let's say, question it in simple way, what I can say. But when we talk about a long-term perspective, let's say when we invest for a decent enough time frame, the charges could be something which can be easily managed. So once you look around, let's say the total value of these shares was 53,645, and the value you have to pay at the end, including everything, is 53,847. So effectively less than even 1%, less than even 0.5%. But out of that, majority of some of the portion might be going towards the taxes asked by the government, for which unfortunately no investor has a control of. REITs versus InvITs. REITs and InvITs are like stocks which you can buy and sell. But what you can remember is REITs ke andar the returns would be directly linked to the real estate investment which has been made by the fund. REITs are nothing but tradable securities where the portfolio, the REITs are managed by, the full form of REITs is Real Estate Investment Trust. And we have 3 REITs in India and we have 8 InvITs in India. Out of 8 InvITs, 3 would be listed. But the objective of REITs is Real Estate Investment Trust, that you can buy and sell it from 9:15 to 3:30. That is our trading session. 9:15 से 3:30 के बीच में. So you can buy and sell one share right now of a REIT or one share of InvIT, but the value of the share would totally depend upon the performance of the real estate properties which are part of that REIT. And as per the latest guidelines, let's say a REIT has issued or has collected 100 crore rupees from different investors by issuing units. Out of 100 crores, 80 crore money, out of 100 crores, 80 crores have to be invested into income producing real estate, which means that real estate जो already rented out है, office space हो गया, shopping malls हो गया, hotels हो गया, warehouses हो गया. Remaining 20% could be in raw land. And whatever rent they get, 90% of that has to be paid to the investors every year. This is the guidelines which we have for REITs as per SEBI guidelines. No, Ayush, we would not be going on the intraday trading aspect, which is more prominently used when we talk about more from the perspective of technical analysis. That can be taken in one of the sessions which we might plan out ahead in the technical analysis part. Any queries to anyone, any questions to anyone, I am happy to take, please. We have time, so we can have any discussions or any questions we have. It could be as basic as possible. Buy today, sell tomorrow. Ayush, I am a property of ICICI Securities right now. So I cannot share my details, but the world is big. In case you can find out my name, I do not do any consultation on an individual level. That is what I do. I do not do it. So, and in case we get chance to meet again on any of these such platforms, you can be part of it. Amit Somayaji, how to analyze a stock? There is no single way I can say where we can analyze a stock in simple way. But what I normally say is try to understand the business of the company. In case you understand the business of the company, Nobody in the market, in normal case, it is very difficult to give a right price. And nobody knows the top or bottom of the market in simple way. But what you can do, and bottom or top of even the stock. But what you can definitely look around is the business of the company. So try to read about the business of the company. Somebody has asked about the index, Nifty or Sensex. Sensex was formed in the year 1986. And आज की date में, in case you look around all the 30 stocks of Sensex, we would only be having 6 stocks which were there in 1986 until date, which includes like Mahindra and Mahindra, Reliance, HUL, L&T, Asian Paints, and 1 or 2 more. So we have 6 stocks which are part of the index which we have. And the objective of creating an index is to basically represent equity markets. So अगर मैं आपसे बोलता हूँ, how has Indian equity markets performed in the last 10 years? और अगर Sensex and Nifty नहीं होते, so could we assess how they perform? So you can understand Sensex and Nifty are like the role which a barometer does to measure the air pressure. Yeah, thermometer thermometer does it for checking the fever. Same role is done by index like Sensex or Nifty. Sensex is on 30 stocks and Nifty is based upon 50 stocks. And these 30 and 50 stocks basically try to represent our Indian economy in the best possible manner. Fundamental, we are not doing fundamental and technical, but just understand fundamental can be looked into. I'll just finish off fundamental and technical in one simple sentence. One, when we say fundamental analysis gives you the answer to the question called why or why not I should invest in a company or a business. Technical analysis would give a answer to the question called when I should enter and when I should exit. And their entire scheme of things and Gyan would revolve around that. Murugappan sir, we do not have any stock tips, sorry. Oil India or ONGC, that is up to you. Yes, you can buy international stocks through ICICIdirect, subject to the limit of 2,50,000 rupees in a financial year as per liberalized remittance scheme of RBI. Any questions to anyone, please? I'm happy to take even the basic query. Buy today, sell tomorrow. You can do it, sir, on the platform. Abhay Philip has asked, will institutions or brokers trap retail traders? Sir, trading is always such that there can be possibility of you making money or losing money. But what we have discussed in the long run, whether equity can give you returns, the answer is a big yes. Big yes. And when anyone say that whether I can make money in equity or not, I ask a very simple question. We would see that businesses succeed. It is just that every business has a cycle. Some of the businesses might be doing very well in the next 4 years, but an average in the next years ahead. Similarly, let's say as long as we are bullish upon our jobs and our profession, and in case you believe your salary would further increase or the profession will further grow, then you should definitely invest into equity, because equity is nothing but the representation of these businesses. The best brokerage plan you can look around on ICICIdirect, so you can consult the our RM. You can have your RMs as well. So you have the call center where you can get the information. Somebody has asked about ETF. ETF is like investing into a normally index, like a normal stock, exchange traded fund, which you can buy and sell from 9:15 to 3:30 as a normal stock. And every ETF would represent a particular basket of securities. Gold ETF and the index ETFs are the two prominent ones, where gold ETF would move in line with the price of physical gold and index ETF would move in line with the price of an index. So we have close to 105 odd ETFs, including every kind of ETF. These days we have ETFs on everything. Somebody has asked me about CAGR. I do not know your name. R, effectively what means say CAGR. CAGR means compounded annual growth rate. And a simple example I would tell you is, once you go to the bank, you make return. Once you go to the bank would offer you a fixed FD, and they would offer you two plans. They would offer you two plans. One, the rate of return in is interest payout or interest cumulative. And the option could be quarterly compounding or quarterly being paid. So you can have quarterly payout or quarterly compounding. So quarterly compounding means, let's say you are getting a 2% quarterly rate, 8% annually. So your 2% would be getting reinvested. First 2% would be getting reinvested for 9 months. The next 2% for 6 months. So the third 2% for 3 months. So interest on interest you earn would lead to compounded annual growth rate. Sir, it depends upon your network as well. I do not face any issues with respect to ICICIdirect website as such. You can buy and sell sovereign gold bond like any other thing you do on stock exchange, but unfortunately the secondary market for sovereign gold bond is not that high. So there's you might have to sell the sovereign gold bond if there's any buyer available, but at a slightly higher discount. Any query to anyone, please? Thank you very much for participating. I enjoyed it thoroughly, and in simply put, it's good to see people participating. And I'll finish off this session on a very simple explanation of why exactly we are doing what we are currently doing. The investments in equity has started gaining momentum, and in the last 10 years, the amount of money which is getting invested into equity primarily has increased by leaps and bounds, close to double the amount what we used to have 10 years ago. So keep on investing in equity. Happy learning, happy investing. And you can start small, but you should definitely start investing into equity. Govinji, shall we call up the session or?